Hi, it's David from the Ruth David team at Remax Select up on Main Street in Vancouver, January 17th. This is podcast number 3. I promised that I would do a podcast on a market update. So I'm really happy to have Jeff Benna here. Jeff Benna is a realtor up at Remax at Oak Ridge Real Estate Services. Jeff and I use the same methodology to predict the market, see where the market is currently, and where it's been. We use something that Jeff and I have termed the absorption rate, which is, well, you know what, I'm going to let Jeff explain that to you, and then we'll kind of I'll let Jeff take us from the west side to the east side, and we'll break it down in detached, attached, duplexes, and apartments. So here you go, Jeff. Jeff Benna from Remax Real Estate Services.
Thanks, David. We're going to look at the absorption rate as one leading indicator to give us a clue what's happening in the market. Now, that's calculated by taking the number of homes for sale in any given market and dividing by the number of homes sold in a month. We're using the first half of January's data, and we're going to double that number for the number of sales to give us a good impression of what's happening so far. So on the west side, in detached homes, currently there's 427 homes for sale. So far this month, the first 2 weeks, there's been 8 sales. And so if we double that to 16, that gives us a number that should indicate where we'll be at by the end of the month. 427 divided by 16 gives us 26.69, or almost 27 months supply. The attached properties, half duplexes and townhouses, we have 8 months supply, and the apartments, west side, we have just under 4 months supply. On the east side, 542 homes for sale in the detached properties. So far this month, 21 homes sold. We double that to 42, gives us just under 13 months supply. In the attached, 6.7 months supply, and in the apartments, the bright spot, 3.5 months supply.
So what about pricing, Jeff, when you look at that? Is there upward pressure on pricing, downward pressure on pricing? It is what it is, I think. I mean, personally, it looks like prices are staying the way they are.
I would say as a leading indicator, if we look at the absorption rate, it's a reasonably good predictor of what's going to happen to prices in the next few months. So when we're seeing less than 4.5 months supply, then generally we're going to see upwards pressure on prices. When we see 4.5 to 9 months supply, you usually are seeing a balanced market, and more than 9 months supply, generally we'll see downwards pressure on prices. So if we take a look at what we're seeing here, we can see the detached homes in both markets. Probably prices are a little downwards pressure. The attached, we're seeing probably balanced, and the apartments, again, the bright spot, we're seeing potentially upwards pressure on prices just because there's very little supply and reasonably strong demand.
So I think when I'm looking at the stats, Jeff, and maybe explain to the people here, I'm looking at the inventory levels, really what it's showing, and I guess the only people or the only part of the market that shows any kind of negative is probably the detached. But when I'm looking at that, the number of houses for sale this year is not too different than last year. So it's not like we've had a huge number of homes come for sale all of a sudden. It would seem to me that we're just waiting for the buyers to get back into the market. Yes? No? What do you think?
I think it's a reasonable amount of beginning of the year inventory.
Yeah.
And if we look at last year in January, February, there was so little inventory and so much demand. We saw a huge run up in prices. Then with the uncertainty that was created with some of the government policies and taxation that occurred in the latter part of the year, we saw a lot of people step back, put their hands in their pockets and say, I'm not going to list, I'm not going to buy, and this is what caused the market slowdown.
Yeah, and that's why the inventory stayed pretty level, I think. And you can see from that statistic some of the policies that or initiatives that the government put in place has affected part of the market more so than the other part of the market. And I guess what I'm saying is the people that want to buy and get into the market, they're still doing that.
Yes.
Yeah.
And the people that are selling, those high prices occurred for a period of about 9 to 10 weeks in the middle of the spring market. Never before those prices existed, and it may be a while before we see them again. But ultimately, the prices now, I think, are still higher than they were in January of 2016.
Yeah, and I would say just for our own experience, this is always a tough time to predict the market because you've got a lot of inventory that comes over from the previous year and is still on the market. Never sold that year. It's been on the market so long. Chances of it selling this year without some kind of an adjustment to the marketing strategy, whether it's pricing or whatever it is, hopefully will come off somehow, whether they expire, whether they get pulled, and then our inventory should come down a little bit. So I think both of us agree that if the inventory comes down on the detached, we're going to see some more activity, which could be one of the bright spots, but it just it depends kind of what happens in the next 3 to 4 weeks. I know that we're pretty busy. We've had a couple of our detached houses that we've come for sale this year. Both have gone to multiple offers, but they were priced very sharply and did attract a huge number of people looking at them. So
we're seeing a more normal market too, in that the more affordable end of the market seems to be the beginning of the market now. So as each one of those apartments sells, those people trade up to a townhouse, those people then sell their townhouse and trade up to a house. A lot of times you'll see that the housing market will be the last one affected as all the normal things that happen that drive a market occur. First-time buyers, we've had a big boost from the current government and in an interest-free loan. People are still forming families. They're leaving home. They're graduating from school. They're having babies.
Yeah, they're still making a move.
They're still making a move. There's always going to be activity in the market, and it's going to drive things along, and we'll see a pleasant, normal market is my prediction this year.
So I think, Jeff and I talk about this kind of every day or every second day, so, we're going to keep tabs on it, and we'll give you another update kind of the beginning of February. I think the great way, just to add in there to the way that we look at the stats, it's easy for us to kind of keep tabs on the market almost on a daily basis. The reality is when it comes into effect is after a weekend, we can take a look and see what got sold over the weekend, what hasn't sold, things that we think should have gotten sold. If they haven't sold, then we kind of investigate a little bit further. But if you have any questions or if you want any more information, just call Jeff up at Oak Ridge at 604-868-1651. That's 604-868-1651. And Jeff doesn't know this, but because we're both big proponents of goal setting, I'm keeping him around for the next podcast. And we're going to talk a little bit about my favorite subject, my team's least favorite subject, but goal setting. Thanks a lot, guys.